Hey folks, Dan Frio here with your market update. So why do I do this channel? Why do I do the news that I do? Well, it's basically to provide you guys with the facts and details explaining economic events that's happening in the economy that will be affecting the markets. And when I talk about markets, I talk about stocks, bonds, crypto, and real estate. Okay, so what you're seeing on your screen right now are basically the screen that I see on my page on a daily basis because I track bonds and what's going on with mortgage rates. But in today's video, I just want to talk to you about the broad economy and a lot of information that's coming out this week. So the first thing we want to look at is there's really not any economic news coming in today or really tomorrow. The slew of information is coming in on Wednesday and Thursday. Look at this. We have CPI, crude oil, initial jobless claims, and PPI. If you're looking at this or you're following me for the first time, you're saying, okay, there's a lot of letters there, but what does it mean? Well, basically what you got to look at is the CPI, what you're seeing right here is consumer inflation. Okay, that's it, basically in a nutshell. When you go down to here, this is producer inflation. Okay, so I watch this on the producer side to see if there's big inflation on the producer side, it's got to flow down to the consumer or the producer has to eat it in their profits. So those are the things that we've kind of followed, because if the producer prices are still ratcheting up, well, you're going to see it flow over to the consumer side of the equation. Okay. Again, look at it this way. If I produce this bottle of water, all right, and my prices go up on this bottle of water, if I don't pass those price increases over to you, that means I'm making less money. That means my stock prices are going to go down. That means the stock market's going to go down. Okay. So I just want you to understand the dynamics of this. Okay. So the core CPI, what this is, CPI is basically a basket of goods and services stamped at a specific time, how much it would cost you to get any of those services. Okay. In that basket. All right. So what happens is they stamp it. And for example, right now they stamped it back in April of 2022. Okay, so if you analyze April 2022 to April of 2023, that would be your year-over-year CPI numbers. Well, that number previously came in at 5. They're expecting it, the analysts are expecting it to come in at 5. What's it going to come in at? That's all I'll let you know on Friday or on Wednesday. CPI month over month, it means exactly that. It's from the month previous to the current months. And then the core CPI, again, what core CPI basically is they pull out food and energy out of that basket of goods because food and energy are really volatile. Think of the gas prices. You go to work one day and the gas prices are $3. You come home that day and the gas is $3.50. Okay, huge fluctuations in that. So we're going to monitor this is where the inflation numbers on the consumer level look like this week, on the producer side of the equation this week. The other thing that's coming in is jobless claims. How many people lost their jobs? So why are we focusing in on this? Well, the main reason is because of the Federal Reserve. The Federal Reserve was created for 2 reasons, and 2 reasons only. One was full employment, okay, maximum employment. The other is price stability, AKA inflation. Their goal, their job is to keep prices stable and to keep as many people working as they can. Well, right now we have a robust inflation. So the Federal Reserve is trying to do this. They're trying to go back here and say, well, we need more and more people losing their jobs so there's not enough money in the economy to continue to keep prices rising and rising and rising. Okay, so now let's get over to the housing market of this. We see inventories coming in right now, decreased 0.6% week over week. You might say, okay, whatever. Well, the bad news about inventory is basically supply and demand. Let's just go over to a supply demand chart. The more of an item you have, okay, usually unless the demand really spikes, if you have way excess of something, to sell all your products, you have to lower the price to make sure you can hit an equilibrium to sell that unit. On a flip side, think of you have like the Mona Lisa. You have one. You can basically determine the price you want. Okay, so there's an equilibrium there between you having one that you can dictate the price and there being too many that the market can't even hold. That's what we saw in 2008. There were way too many houses that started flooding the market. The reason being is subprime mortgages. Subprime mortgages cause millions of people's house payments to double and triple. Okay, those people were then forced, and I say forced, to sell their properties. Okay, flushing the market with a ton of homes driving down the prices because now there's way too many homes to gobble up that inventory. You need the prices to drop. So I'm kind of happy when you start seeing these things, for example, like this, when you have inventory down, because we know the demand is there, but not there as robust as it was. So we need housing. Just think of it. If we had a flood of houses coming to market, talking millions and millions and millions, you'd have excess supply and you'd have housing prices crash. Why I'm saying it's not going to crash is right here. Inventory is decreasing, okay? And a lot of people are saying, well, no, that's not. Well, it is. Okay, so if you go down through here, I usually highlight it, but I couldn't highlight it here because you guys can't see it. Inventory was up 39.7% compared to the same week in 2022. So you're probably saying, there we go. Okay, you're getting more and more and more houses coming to the market. Thus, prices are going to start coming down. But no, continue to read. So if you just caption that, you'd be like, okay, there's my point. Housing's going to crash. Okay, but let's go over to this. And down 52% compared to the same week in 2019. So you can see we have a shortage in homes, okay? And a lot of people are going to deny that, but it's the facts, folks. So without further ado, let's get over to the bond market to see where mortgage rates are going for today. And this doesn't look really good, but let's get over to here because I got to bring up my mortgage rates for you guys. So I go to Mortgage News Daily. And here's what they're saying where rates are. So these are not my rates. These are no individual bank's rates. These are Mortgage News lenders, Mortgage News Daily, sending out surveys to mortgage lenders all over the country and saying, if you had a borrower that had a 740 credit score, now pay attention to the criteria, 740 credit score, 20% down, buying their first house, and it was a single family home, what would your rate be? So they send out this survey to all these lenders and they come back and say, my rate's this, 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 and they put it in here and blend it. Because again, it's an average. So these are the top 6 products people use when they're buying or refinancing their houses. Here's where the rates are based on that criteria by Mortgage News Daily on an average of what's out there in the banking system right now. So if you want to find out if you can you qualify for a loan? Can you qualify to buy a house? Maybe would it make sense for you to refinance? Yeah, there's people refinancing right now that closed about 6-8 months ago in the 7s. Now rates are down in the 6s. Believe it or not, if you have a $400,000 or $500,000 house and you can save 0.5% on your rate, you can save some money. To find out more about me and my team, all I need you to do is go to therateupdate.com. There it is. You can get a hold of us right over here by giving us a call at 844-775-5626. Make sure you dial that correct number because if you miss it, you're going to get through the Loan Depot. You're going to be pretty disappointed, I betcha. But if you would like to find out more about me and my team, here it is, the rate update. You can apply online. You can call us. You can even schedule an appointment to do a one-on-one consultation down below. So that's it for today, guys. If you like my video, all I ask you to do is give me a thumbs up, subscribe down below, and hit the bell every time I post a video. You get an alert. God bless, guys. Thanks so much for watching. I'll see you tomorrow. Bye-bye.